Welcome back, and joining us on the show now would be Kunal Shah. He's head at Commodities at Nirmal Bank. But before that, we'll let you know on how the commodity prices really have been. If you look at the month of July, we've seen most of the commodity prices actually continue to decline. The crude oil prices have posted in a fourth week of decline, and for the month of July, we are down by 7.5% onto this one now. Similar has been the case with the industrial metals as well, where you have copper, aluminum, zinc, all declined by more than 10%. And with the kind of markets we're looking at right now, it is going to be about the U.S. non-farm payroll data. Well, that comes in today in the evening. That would give you further direction for many of these markets. Kunal, hi, thank you for joining us. I'll start with metals first. And a weak June and an even weaker July. How is August now looking to you?
The weaker June, July, everything is because of China. There is no positive trigger coming from China when it comes to metals. It seems that the Chinese slowdown has been worsening in last 2 months, and there has been no concrete policy support by the central bank. So even though at a time when we saw 2 rate cuts in a span of 7 days, the market, the prices of commodity, the prices of real estate continue to went down. So I am of the very firm view that the fundamentals from the China perspective doesn't look very lucrative. But at the same time, we are at that cusp where we are on the verge of the start of rate cut cycle in the Western economies, and especially in the US and Europe and UK. So I believe that if prices decline by another 4-5%, some of the metals will be available at their cost curve. The fundamentals for the short term, because of the China, is not looking attractive. It may correct a bit from here, but I mean, I'm not expecting a flash crash. These are the opportunities. You buy things when things are really gloomy, and that's the case with the metal. So with the rate cut cycle about to start, the downside looks very limited, and fundamentals at this point are not at all lucrative, but all of these are priced in. So copper perhaps at 780, 775 is a good buy. Till then, we should wait.
Okay. Kunal, you said that 4 to 5% of decline in metals is a good time to start buying. Buying for what kind of rewards on the higher side?
We are not going to see that levels of 950 or 1,000 rupees by the end of the year. I'm not that bullish because the inventories are building up quite sharply. So you can expect from those levels 5 to 7%, 8% bounce back. That's it. But I'm not expecting any fireworks because we need China stimulus, China coming up with a stimulus. That will be the trigger. How they are going to revive their sluggish real estate market, what are the steps they are taking, that will decide the fate of metals.
All right. So until we see a big bang one come in from China, the metals are not going to get their life back. How are you reading then the U.S. non-farm payroll data today? And as you said, the next big thing to watch is going to be the U.S. Fed meeting in the month of September. Has the data, has the rate cut already been factored in by the markets right now?
Okay, so I personally feel that rate cut is already priced in. Gold has in fact discounted the rate cut in the month of March, April only, when it tested $24.80. So rate cuts is no big thing. Rate cuts are coming. You see what has been happening. Japan has increased the rate. So it's a coordinated moves by all the central banks. Japan cannot print anymore after so much printing, and US, they are not able to service their interest also on their debt. So 75% of their total revenue, which they are getting from the tax collection, are going to for just servicing the interest cost of the debt. So they have to reduce the rate. It's a no-brainer. So we are at the start of the rate cut cycle, and that is very bullish for gold and silver. All the economic data from US, interestingly, have come. 35% of the data later have been revised to the downward revisions. So the US economy is not that strong the way it seems. And that is why gold silver is my favorite pick. Gold is going to go up further.
I was coming to gold, Kunal, and that is my final question. So what is your sense on gold and silver? Because silver seems to be moving with the base metal prices, but gold seems to be standing tall by itself there. What kind of highs would you anticipate? If someone was to buy right now, also ensure to make use of the duty cut, where do you see the prices go now in the international markets and the Indian?
Okay, so I think duty cut, we've seen from $2,350 gold already at $2,500 right now. So Some of the effect of the duty cut is already been eroded. Gold looks very strong. All the reasons to remain long in gold, they continue to remain, apart from only one, that China is not buying gold from last 2 months, 3 months. That's not a big deal. If ETF starts buying gold, if there is a slowdown globally, gold is going to go up exponentially over a period of time. So my bet is gold is a must in your portfolio in current economic environment when central bank, in spite of the higher inflation, in spite of the high debt, they are again going to go on the easy monetary policy. So we are entering into a absolutely uncharted territory. This has never happened in the history of financial market. That after printing so much, they are again starting their monetary easing cycle. And what impact that will have on inflation, we don't know. The likelihood of inflation again going up after cutting the rates is very high. So I personally believe this is the time to remain in gold. De-dollarization process is taking place. BRICS economies are forming, adding new members, and all of them are planning to float currency backed by gold. So gold is
then. Gold is a no-brainer. We get that. Gold is a no-brainer, Ekta.
Absolutely. It's a no-brainer. And maybe you should just accumulate gold before the prices rise even further, which is what Kunal is probably indicating at this point. Thanks, Manisha, as well as Kunal, for taking us through that conversation. But let me end the show with some good news. The numbers are out and it is final. India watched Budget 2024 with CNBC-TV18. CNBC-TV18's dominance continues as it knocks out the competition on Budget Day. CNBC-TV18 is the clear number one with 91.2% viewership during Budget Day. Yes, in fact, continuing its 25 years of leadership, CNBC-TV18 won another gold on Budget Day. Thank you, viewers, for your consistent patronage, trust, and continued support.